Hey everybody, so recently the Federal Housing Finance Agency announced that they're going to be adding on additional price adjustments for rates for second homes and conventional high balance loans. What that means is any mortgage that folks are going to try to obtain for a second home or a conventional high balance loan, cash out or purchase or refinance for conventional high balance, it's going to be more expensive than it is today. Now, yes, the rates are going to be going up, but for these specific topics of second homes or conventional high balance, it's actually going to increase even more significantly. Now, it's not going to be implemented until April 1st, but a lot of investors and lenders are going to start implementing this probably anywhere from 4 to 8 weeks in advance. So we're talking about from March, maybe even in February, we're going to start seeing this. Now, I've seen a lot of folks on YouTube sharing about this announcement, but I haven't seen anybody actually implementing a live situation with today's rates. If we apply these rate adjustments, what it would look like. So in today's video, I'm going to be sharing with you 3 live examples of how that would look. So if we take a look at the news announcement here from Mortgage News Daily, you'll see that it says here on April 1st that it's going to be implemented. And the range for the second homes, if they start with the second home vacation homes, the increase is going to be anywhere from 1.25% to 4.125% in pricing adjustment for these mortgages. Now, I'll share with you what pricing adjustment is in a moment, but that's what it says here. And then if we go down here, it says, while not as dramatic, the LLPA means loan level pricing adjustments. That's specific to some of these products. For high balance loans, which means any loan that's over $647,200 for a single family, going to be going up anywhere from 0.25 to 0.75%. And then cash out an additional 0.75 on top of these adjustments for a conventional high balance if you're doing a cash out. So if you go to, let's say, Freddie Mac's site, and Fannie Mae has it too, they're going to be sharing with you what this specifically looks like. And so they provided a great table. It's going to be loan to value based, so LTV based is what's causing these adjustments. So right now, for a conventional high balance, if it's a purchase or a non-cash out, there is a 0.25% or 25 basis points is what we call it in this industry adjustment, increasing the rate pricing. But what's going to happen is as of April 1st, it's going to be adjusting in a tiered scale based on the LTV from 0.5% all the way up to 1% for purchase and no cash out refinances. And then for cash out conventional high balance, they're calling it super conforming, which means conventional high balance, any loan over the 647,200. It's going to be an additional, see here. So it's going to be tiered this way, 1.25, 1.5, 1.75%. And then I built an Excel sheet. So just if you hang on tight, I'll show you what this actually means in terms of real dollars for certain individuals. Now, second homes, whereas it was just a 0.25 price adjustment for these homes, it's now tiered at a large scale. So if we take a look at that, and I apply 3 scenarios. So if we take a look first at the primary purchase for a conventional high balance. So conventional high balance, meaning again, over $647,000, 200. Is considered a conventional high balance loan all the way up to $970,000, $800. So if we take a look here, for a home that's worth $1.2 million, 20% down, 80% in LTV. If we look here, as of now, as of right now today, these are the rate pricing for this scenario. So you can see here at 2.75, 30 years fixed. It requires 4.558 points or $43,000 to obtain this rate. The par rate here is 3.625 right here. So this individual is going to be getting $528 in lender credit. So this is what we call par rate, where there's minimal to no lender credit or absolutely no points. Okay. So now if they implemented the 0.75% or 75 basis points in pricing adjustment, because these are the prices, the cost to obtain these rates, pricing adjustment, if we add it in, you can see how this changes pretty dramatically, right? The 3.625, this individual was going to get $528, and this was the par rate. After applying the 75 basis points, it adjusted by 0.25%. The par rate now is all the way up here at 3.875. Now this individual probably won't care spending $48 for 3.75%, But at the same rate of 3.625, what once was $528 they were going to receive for lender credit now costs this individual $6,672 in points. So if you are in the market, I hope you are able to find a house and you get your offer accepted if you're in the market for this type of price range with conventional loans, because my guess is lenders are going to start pushing the 75 basis points or the tiered structure, 25 to 75, somewhere around February, definitely in March, in preparation for the April 1st. Okay, now let's take a look here on a high balance cash out refinance, because they're adding an additional 75 basis points. So in this scenario, if this person was doing a cash out refinance, the par rate is 3.75%, and they're receiving $864, right? So the pricing is it's a negative in the sense of they're getting money at the closing table rather than they have to pay money, 4104 for 3.625. Now with the additional 75 basis points in adjustment, look here, the par rate jumps from 3.75 to 4%. Now this individual is getting $12.38 for lender credit, and if they want to get at 3.875, it's going to be $943.20 in points. Now this is pretty significant. So this is if, as of today, after I finish this video, the adjustments, the pricing adjustments for these got implemented right away. This is what would happen. And this is what we talk about rate pricing or rates changing. It's because the par rate keeps moving up and down. Now, this is not going to be market dependent. This is just being implemented and enforced by the FHFA, the Federal Housing Finance Agency. Now, let's take a look at the last one, which is the second home, which is the most significant. So second home, this is just a conventional loan, $750,000 purchase price, 20% down, so $600,000 loan amount. Currently, for a 30-year fix, the par rate, close to no points, is 3.5%, receiving $1428 in lender credit. But with the adjustments based on the table that they showed here, right? If you look here at 80%, they're going to be applying 3.375 additional in price adjustments. So what that means when we look at this Excel sheet, if we add in 337.5 basis points on top of all of these adjustments, so you just add 3.375 to any of these adjustments, which we get here, these are the new adjustments, you can see there's no par rate right now. This person will most likely be going into the mid to high fours if it's based on today's rates. And so this is really significant, and it's going to deter probably a lot of folks that's trying to purchase a second home. I know during the COVID situation and the pandemic, a lot of folks were purchasing second or vacation homes, but this is really going to detract a lot of folks from doing so. So I hope this video was helpful for you. If you are in the market of purchasing a second home, or if you're in the market of purchasing a home that's in the conventional high balance loan limit, or a refinance in the conventional high balance loan limit, to give you an understanding of how this is going to really impact you. If it did, then please like, subscribe, and comment below. Appreciate you. Thanks, and I'll talk to you again soon.